Senior credit analyst at CreditSights. Good morning, Zerlina. How likely is it that the government throws Zhongzhi a lifeline?
I think the chance is actually very low. As you just mentioned, a lot of the exposure is to the high ultra net worth individuals, and the entry requirements for some of these trust products is about RMB 3 million. So to some extent, the contagion effect to the broader wealth management market is not very severe, so I don't really expect the government to step in. And if you look at the history, there are some defaults of these type of trust product. One is being the Sichuan Trust. It actually also went for bankruptcy filing. Most of the trust holders, they didn't get government support. But interestingly, the recovery rate of the trust product, which was just announced recently, was about 30%. If you compare with that with a lot of the property restructuring, it's actually not too bad.
Zerlina, I'm wondering, you said that the risk of contagion appears to be contained, but what does this mean for sentiment when it comes to investors, particularly really wealthy investors? What do you think it means? Because when you look at Chinese social media over the months, they are really, really angry because Zhongzhi is obviously a massive wealth management firm, and they feel like, their funds, all of their money, millions and millions of dollars have just been thrown away.
Yeah, I think it's actually quite interesting in terms of sentiment because the exposure is for the ultra high net worth individuals. And I would say maybe some of the money are not just from your salaries, and it's a lot of from the gray area. And a lot of these clients, they are not very loud in terms of protesting or asking for their money back from the company, because then the government would be saying, where did you get the money from? Especially right now, it's involved in the court, it's involved in the public security investigation from the government. So the holders of these defaulted trust products are actually a little bit cautious. But of course, when it comes to the broader market sentiment in China, people are not positive. If you look at the investment channels available in China, not so much. In the past, there are still the property investments, but now people's expectation for property prices is coming down, and the stock market is definitely not the go-to one. So I would say the consumer and investment sentiment in China is still quite fragile at the moment.
How deeply do the problems go, Zerlina, in shadow banking? What does this tell us?
I think we need to look at the shadow banking at different segments. For these type of trust products, of course, we are going to see continued default, because if you look at the underlying, a huge chunk of it is related to real estate trust loans, and some of it is related to local government financing vehicles. And we all know they are facing a little bit of liquidity trouble. But if you look at the bigger wealth management market, which is the underlying is some of the money market funds, some of the standard public bonds, or some of the stock market, it seems are still going quite okay. I think one thing that investors need to look out for is the movement of the onshore rates. At the end of 2022, when the Chinese economy was improving a bit, then the onshore rates went up. Then we saw a huge wave of wealth management product redemption that pushed the underlying bond prices. There is a sell-off, then there is a vicious cycle in the wealth management market. So that's one thing we need to watch out for.